And we're live. Welcome everyone, and thank you for joining us today for our FinTalks webinar series. Over the course of the next months ahead, we will be featuring more trending topics and prominent speakers from our Bahrain FinTech Bay ecosystem. My name is Susie Zira, and I'm Head of Communications and Events at Bahrain FinTech Bay. In today's session, you'll have plenty of time. If you have some questions, please go ahead and enter them in the questions section, and we'll get to it as soon as we can. And if we don't get to your questions, please go ahead and email us at info@bahrainfintechbay.com. Today, I'd like to welcome Gareth Lewis. He's Delio's Chief Executive and co-founder of FinTech Scale back in 2015. Welcome, Gareth.
Thanks for having me, Susie. How are you doing?
Great. The business world, as we know it, has changed over the last few months, and despite economic uncertainty, now is definitely not the time for digitalization to fall off a financial institution's agenda. So today's session, Gareth, you'll be delivering B2B technology to financial institutions amid COVID-19. Tell us a little bit more about Delio.
Yeah, so we set Delio up in 2015. So we founded in the UK. We're now kind of a team of around 65 people active in 7 locations globally. What we do is we focus on the challenges that large financial institutions and right the way through to small angel networks are facing around digitalisation of their private market activities. So that kind of comes from more and more investors across high net worth, ultra high net worth, and up are increasingly looking to put more money to work in alternative investments, be it private equity, real estate, social impact. We provide the tools and technologies that enable financial institutions to offer those sorts of opportunities to their clients more efficiently and more effectively, and fundamentally in a structured and compliant manner. So we provide a white label platform that's configured and flexible to individual use cases, and then we provide a number of kind of value-added services around that, around designing, developing these propositions, and other bits and pieces that kind of go into building these solutions. So we've kind of in a short space of time, we've managed to scale the business quite quickly to work with a number of large global banks, and we've seen a variety of challenges and pros and cons of kind of delivering these solutions in all different kinds of landscapes.
So why do you believe technology is particularly crucial during this period?
I mean, I think it's everyone probably on this talk today realizes that it's in the last few years it's been crucial regardless of COVID-19 or no COVID-19, I guess. So I think in particular, I think this is really just this scenario and this environment has been a real kind of eye opener for a lot of people, and a lot of justification for some of the good work that has been going into digitalizing, and I think it's playing a crucial role, and it will continue. Technology needs to continually play a crucial role. It needs to support financial firms in times like this, but also in beyond. So I think with this, I feel it's part of a cycle where this was kind of stuff that was being recognised by a number of financial institutions anyway. This is a really good case in point of why it needed to be the case. And I think the trends around adoption and firms needing to stay connected and have those digital channels will continue beyond this.
Right.
Sorry.
So how has this shaped financial institutions' response to technology? How much more is that?
I mean, I think it's a challenging time. I think that goes without saying. I mean, what we've seen from a B2B perspective is that lots of firms that were recognizing they needed to do more in digitalization are continuing to do so, and those that perhaps are a little bit slow behind the adoption curve are also having to embrace and adapt. And I think now more than ever, with everyone working remotely and probably, arguably probably less distractions across the board away from day-to-day business, I feel kind of now is as good a time as any for firms to start addressing their digital needs and their requirements. But obviously not just planning for now. So I guess it's not a case of just jumping into something that's not kind of strategic across the next 2-3 year time horizon. It can't just be trying to address technology challenges in COVID-19. It needs to be decisions and solutions that go far beyond that. We've seen a mixture globally of some moving quicker, some moving slower. There's often challenges around approval chains, not being in the same place can be challenging in moving things along in terms of actual decision making for embracing technologies. But At the same time, we're also seeing some of our clients and prospects being much more able to focus on developing business cases and the rationale as to why they should be making certain technology decisions. I think COVID-19 shows that to keep up, financial institutions do need to adapt quickly, and we've seen, we have, in fairness, we have seen that. I think there's differing at different levels, but I think there has been a real uptick in recognition. We've had more inbound leads on our website this month than we ever had, and so I think it's taking it for what it is and using it as an opportunity to make some changes.
Absolutely, that's interesting. In terms of the investment landscape, technology can play a crucial role, but in those times, about personal touch, it still remains essential. But what part will tech play in this? Will it replace human advisor, or do financial advisors need to learn to work alongside tech?
Yeah, our approach is we've always approached our solution. Delio has always been kind of B2B, delivering for enterprise financial institutions from the outset. I see a lot of technology-enabled businesses and startups in the FinTech industry that have maybe gone down a B2C approach, or a disruption. We're going to kind of disintermediate, but we've always kind of been a little bit more. We're looking to build solutions and very much see technology as an enabler. Use private banking, wealth management industry as an example. It's very much going to be an omni-channel market segment, particularly for private assets and more illiquid investments that we focus on. It's involved. It revolves around things like discretion, control, privacy, relationships, advice, adjectives that don't really resonate with a completely automated digital modeler. So technology is definitely an enabler, not a disruptor, if it's approached in the right way for financial institutions. Despite obviously a lot of talk probably to the contrary. And I think there's twofold really. It's kind of, the first bit is around investor experience and client experience more broadly. And there's obviously a lot of value that can be had from clients being able to access 24/7. That engagement process can be two-way rather than one-way, rather than constantly waiting for an advisor to arrange meetings. The client has that interaction with whatever it is, be it their portfolio or new investment opportunities or new insights. So I think really, if advisors embrace that in the right way, it can be a real enhancement to their offering and increase touch points, increase relationships, create new monetization opportunities. Then the second bit, I guess, is around the internal approval processes and the internal ways of working and the operational bits. And technology used effectively can really aid mainly kind of improving operational efficiency and reducing risk and compliance and reducing risk around compliance and governance rather. So I think that then in turn should be looked at in the right way. If those more manual repetitive tasks can be structured and digitalized to be more robust and more effective, that generates more time and more time for the human element to be able to focus on the core value business driving aspects. So I think again, I think that's where pandemics like this will really should be focusing financial institutions' attention, is saying no, this isn't just a stopgap until things come back to normal and we can go back to the human element. And it's not a case of this is a change we're making that's going to completely disintermediate and change wholly the way we're working. I very much think it's a combination of being quite smart about it and saying, let's use technology for where it can add value, recognizing that it's a component in a much bigger picture, particularly on the B2B side.
So we have quite a few startups out there that would love to hear advice. And as a tech scale-up yourself, how can fellow scale-ups and startups continue to grow while navigating during this uncertain economy?
Yeah, I mean, no, I think it's a difficult time for everyone, and wherever you are in the world, and I don't think that's a surprise to anyone in me saying that. I think from my perspective, it's taught us a great deal of lessons, and we've taken quite a bit from it. I wouldn't like to be, go back to thinking how we would have dealt with it maybe in the earlier days, and I think we're a bit more established now. And it's definitely tough, and I feel for a lot of people in different environments. But I also think from a tech startup scale-up perspective, we're in a lot better place than a lot of other industries. So I don't have as much sympathy for us in a grander global scale, but I definitely think it's quite a tough time. I mean, we were in a position where we'd raised money, and we were focused on rapidly scaling, rapidly growing the business, adding more people, opening up in new geographies, going into new markets. What I think this has made us realize is, we've taken the time to focus on extending cash runway. So, looking at every line of expenditure and kind of getting to the point of do we definitely need this? And if we do, why? And I think when you add lots of people to the team and you're raising money, I think everyone typically thinks this funding grows on trees. And I think there's been quite a good opportunity for me to, question a few lines of the expenditure items. And that's been a really good practice now that we've, myself and management have now moved to on a weekly basis in just being a lot more efficient with the use of capital. I think I think that is, the most solid business foundation that you can probably live off, is managing cash and extending runway. I think within every situation comes opportunity. So I think it's spending time to think about how you can do things that will help you move your business forward in this time. That might be as simple as, less distractions for your tech and product team because you don't have as many customer requests, so you can therefore focus on moving quicker along the product roadmap. It could be some marketing and sales outreach campaign that is, that recognizes the situation and tries to deal with it in the best way possible. So we've done a marketing campaign around leveraging how we can help the earlier stage investment ecosystem by providing our technology to a number of organizations on a trial basis, which has gone down really well. And that for us has had the dual benefit of trying to do something to try and help stimulate investment into the ecosystem. But it's also obviously helped us, increase our relationships and our discussions during a time like this. But I think fundamentally, stability is a key thing here, and it's kind of limiting that expense. I think we've also learned, smaller things. You don't necessarily need to be in the room to make things happen. We're moving projects forward with big enterprise banks fully remotely. So I think there's a lot to be taken from it, and I think to continue to grow, it's about managing cash, ensuring good relationships with the investors that you do have, and using the time to make your business more valuable.
Yeah, well, going back to the financial institutions, what are some of the common obstacles among financial institutions when it comes to adopting the technology?
Yeah, I mean, I think everyone realizes that it's very difficult, often with any large enterprise to move things at the pace that maybe a startup has become accustomed to. So I always think there's a little bit of a difference in ways of working, where I think a lot of startups expect that they've built technology and therefore it's they think it's brilliant, and therefore it's just going to be well received by the market, and they're going to sell lots of their product and grow the business successfully. It's all going to go very well. I guess we know that that's not always the case, and I think the first thing is, often building technology for technology's sake doesn't necessarily resonate well with that B2B offering. The key drivers of to my view of B2B adoption of a technology solution is about actual kind of return on investment. So it's got to be, it's got to be there to increase revenues. It's got to be there to increase operational efficiency, and it's got to be there to reduce risk. If it's not a combination of those three things, then it could be the most cleverest technology innovation in the world. It's not going to be adopted. So I think there's often a little bit of confusion around that from startups and earlier stage businesses. And I do think that almost that lack of cultural understanding between the two can be quite a big obstacle. And I think the other thing that often business, I'm thinking about things that I probably forgot, things that you forget as well, is that it's the people you're engaging within the financial institution, that it's going to more than likely be more work for them to embrace your solution in the near term. So it's a significant time and reputational investment from them to onboard and adapt your technology solution. They're essentially making a decision to back it with, and what's the gain there. So I think that can often, that understanding that point as well can typically be an obstacle. And then, there's things that we all kind of know and talk about all the time, around difficulties in change, legacy systems, process. It's often, particularly with B2B sales cycles, they're long. A lot can happen in 12 to 24 months within a financial institution. There can be restructuring, changes in leadership. All those things can present obstacles. You can be 90% of the way into a sale, in your opinion, and that could then go right back down to zero within a matter of weeks. So they're kind of obstacles that the technology businesses will face, and I think financial institutions, they face them just as much, because they have to navigate those challenges from their side.
So in your opinion, what do you believe are the most popular tech features for people within the industry, and in particular the private markets?
Okay, yeah. I mean, I think in the I think the client experience is really important, and so I think having that way of engaging and promoting relationships in a clean, desirable manner, I think is super important in for these kinds of solutions. So for us, it's all about providing the financial institutions with the tools to distribute to their clients effectively. So their clients want to engage with these opportunities. It's around about kind of removing those those friction points and those unstructured components that can often get in the way of doing that. So I think that's kind of that's the key, and there's a lot of interesting things that you can do there. It's how a solution sits alongside other solutions from a client perspective and interacts. I mean, there's no good. So then it kind of takes you into the world of integration and providing a kind of holistic solution becomes important, because obviously no financial institution wants to be sending 30, 40 logins out to their clients around different things that they can access for different needs. So I think not just how great a solution is obviously important, but how well it interacts and intertwines with other things that are on the agenda of the institution. So that's quite a big component, because that obviously that customer journey piece is what makes the financial institutions their revenues and drives their effectiveness. And I think the big one that we learned early on was around compliance and governance. That's such a huge component of the day-to-day life of financial institutions. Then I think any technology company that's looking to sell into those institutions and doesn't realize that or embrace that, I think is making their lives much more difficult. So things around in terms of important features in private markets, it's effective workflows, it's robust governance, compliance, and it's a solution that is simple and easy to use. There's no good also walking in and being, this is a solution, here's how it works, please come and use it. It needs to be ideally configurable, flexible, and open to iteration and feedback from financial institutions, because a lot of people involved that will no doubt have different understandings of how things work. And I think that's kind of where we've seen, we were quite fortunate. We built the technology to be configurable and flexible, which is, it's actually been a great growth driver for the business, is that we've been able to have conversations within a financial institution, deliver a solution in one way, and then open up other use cases. And then I guess we've been fortunate that we're not replacing legacy technology. It's about new propositions and innovation. So we've been able to stand up proof of concepts and rollouts quite quickly. And I think that is also beneficial when these projects can take so much time, trying to remove as much friction on the tech side as humanly possible, I guess.
We've got an interesting question from one of our viewers right now. It's from Shamis Tijani. She's asking, from your point of view, what would be your future perspectives about the B2B development in the MENA region businesses? So I guess we want to hear more about the Middle East and your thoughts on that.
Absolutely, yes. So, I mean, we've particularly from a private markets component, the Middle East has always had a huge, it's built on private transactions across across real estate, across different asset classes. So we think we've always thought there's a really big opportunity for us, and we've had a reasonable amounts of success since we've entered the market in terms of building out a team in MENA, etc. I think a lot of the trends I've seen on the B2B financial institution side are very similar to what we've seen elsewhere in the world. I feel that there's, if you're looking to replace legacy systems, I think that is a big, that's a big ask, and that requires a lot of time, a lot of investment, a lot of boots on the ground, and a lot of relationship building, and an appropriate team to do it. I don't think it's a region where you can turn up, fly in for a meeting and then fly out again and expect to make any progress. I think that's often a mistake people make when trying to scale up globally. I think you need to have people and teams on the ground in order to maintain those relationships, because like with any financial institution, financial institutions in MENA are trying to do a lot of things. They're probably getting inbound requests and for meetings and things from lots of other businesses looking to sell different solutions or looking to work with them in different ways. So I think if you're, so I think there's fundamentally, I think there's appetite because those meetings are being taken, those conversations are being had, technology is being rolled out, and I do see that adoption happening. I think there's like with any environment, I think there's a few challenges that do make that more difficult, but really is kind of a case by case basis, and I don't buy into necessarily one region is slower than the other for technology adoption, and it's this reason, because I think it's very easy to blame the large enterprise institutions for not working, for not moving in the way that maybe smaller tech-led enablers want them to move. I think that's a very easy thing to do. We can all do that and say this and say that, but I think fundamentally, it's about those tech enablers or whoever it is wants to work with those institutions. They need to make it as easy as possible, and I think there's probably different geographies that have probably been more ahead of doing that than from where Delio's from. The likes of New York and Singapore obviously are really embracing and adopting those tech-led businesses are leading the way. But I think as long as good solutions are coming to market in the MENA region, I do believe that B2B adoption will ramp up and continue. And I think there's still a big opportunity for a lot of people to establish themselves and lead the way in doing that. But I think that's the case globally as well.
I hope that answers your question, Shan. Yes, basically, I think, we've pretty much covered quite a lot of interesting topics. There's just one more thing you mentioned. As a company that works within private markets, do you think COVID-19 has had a different impact on your clients than, for example, financial firms working in public markets?
Interesting, yeah. I think fundamentally, I think you can read about. I think private markets has probably been less affected, and there's been a renewed. There's been a massive, interest and growing trend in access to more interesting and liquid opportunities across private equity and the associated markets. So I do believe it's been less affected than the public markets, and this is the case in when there's significant things happened in the last few years. That has always been the case. I think private markets proves to be more longer term and arguably more robust. So I think that's a fair assessment. It's commonplace. I think in terms of on the technology side and the ways of working side, I'd actually say private markets has probably been more affected, just because public markets has been digitalized for a long time. There's Wall Street hasn't been operating on Wall Street for a long time. They've been used to embracing technology solutions, and there's been more technology adoption over the last 10 to 20 years. So when you compare public to private markets on that side, it's probably lagging a little bit. Yeah. So I think there's probably been more impact. We've seen a lot of kind of our smaller clients or smaller prospects that we were perhaps speaking to who found it quite difficult because they were previously running their entire businesses based on events and pitching events, for example, if an angel network. So now that business is completely dissolved in the matter of a few weeks. So I think with those kind of examples on the smaller side, they've definitely been harder hit than most. And I do think, particularly as for private markets, technology across the board, it's now going to be more embraced than ever before. And I do think it was starting to catch up public markets anyway. There's renewed interest, renewed talk, but I really think that's going to accelerate off the back of this.
Great. Well, I'm looking for questions. I think so far we have No more questions. Does anybody have any more questions out there? Gareth, I guess I'll leave the last words with you. Really enjoyed having you today with us. And thanks for answering a lot of those questions.
No problem. You're welcome. Thanks for having me.
Thank you very much to everyone. Take care. Thank you for joining us. Bye-bye.
Bye.